Hey traders, welcome back to the channel. In this quick update, we're breaking down the SPX Weekly Forecast from alphacrunching.com to see what the numbers are telling us before the market opens up this week. I'm doing this video on Sunday, June 1st, and we're going to be looking at the forecast for the week of June 2nd, as well as some trade ideas that are setting up for this coming week. Using the forecast and using the backtest models for trade selection is going to give us a more mathematical approach as opposed to gut feeling. And we're going to share kind of real specific what we're going to be looking for. So let's first talk about the forecast. Our forecast runs from Monday 9:30 a.m. all the way to Friday 4 p.m. close. This is Eastern time. The forecast this week is just very choppy and sideways. So there's no directional lean here that we can sort of predict or be looking for. It could really go either way, and it's probably going to be driven by news events. If we look at the forecast from the previous couple of weeks, this forecast has come down a little bit in its bullishness, and now we're basically trading sideways. Our markers for this week, including the directional strength ratio and the average strength deviation, are also coming down still. So right now we have a weakening of momentum, and we'll see where that plays out next week. And just to kind of look at the chart here, this is the daily chart of SPX, and the forecast is made up of the previous 4 weeks of data. And if we look at 4 weeks ago, it was a relatively flat, choppy week. But then a lot of our movement came from these overnight gaps. We gapped up huge on this particular week. This was Monday the 12th, and I'm going to call it 50, 60 points. And we had a really strong rally. This was probably some tariff relief rally or something like that. And then we pulled back the next week, and then again, another gap up and sideways. So when you net all the Monday to Friday action, you ultimately end up with a choppy forecast like we just saw. So again, we had, let's call it a sideways week, a bullish week, a bearish week, sideways week, net, net, net. And we break these down into 5-minute increments. We're looking at a very choppy forecast. But let's take a look at a couple of the trade setups that are here. There's two things here with the trade setups. These are based on the weekly triumph rate, and I'm looking at 3 put credit spreads for Monday, Tuesday, and Thursday, 3:30 p.m. Eastern. That's about 30 minutes before the close, but only if the 5-day moving average is above the 10. So if we go back to the chart, I have those moving averages here, and we'll see what happens. If tomorrow, Monday, the market starts to lift higher, then this 5 SMA will probably cross up. Then we'll look to get into that put credit spread trade. You can see I'm still holding the bear call spread hedge that I've been talking about over the last, let's call it, week or so. I posted a video about that if you want to check that out, because I knew with the triumph rates being so high, we're going to be adding some put credit spread. So this is meant to hedge some of these trades that we're looking to get into over the next couple of days. Now, obviously, if the market rolls over here, the 5 SMA is going to stay below, and we simply won't take those trades. And then the hedge trade will just simply be a profitable trade. So that's my plan for this week. Let me know what you think, and we'll see you in the next one.